So hi there, welcome back to the Winners and Losers series here with San Jose Options. Today we have a little different study to talk about, and we're going to be looking at some of these one-day trades which are pretty popular these days, and there's a lot of different approaches. So what I want to do is really take a look and compare a few different strategies. And in case you haven't spent the time to see how they're performing, well, that's what we're going to do today. So first, let's take a look at the price chart. So here we have the last month's price action. And we'll see that we have 1, 2, 3, 4, 5. There's probably 5 days where SPX has moved a significant amount overnight. Then you have several other days where it really hasn't moved much at all. We also have to consider the closing price of one day and the closing price of the next. So these are the things we're looking at. And then based on this type of price action, there's all kinds of different strategies that you can use. So let's go ahead and see what we've created today, and we'll study and see how they performed over the first test. So we're continuing here to study the strangle as well as other strategies. So the first one we're looking at is really a one-day strangle. And again, you have your Greeks down here on the bottom, but they're not really so significant with the one-day trading. But let's take a look. So we have a delta of 14, we have a gamma negative 16, theta 13.5 thousand, and negative 1.7 thousand on the Vega. But what's really important with this trade, since it's really a trade that you just put on and you see what happens the next day, it's more of a gamble. We want to see how wide the range is. So it's going to break even about 0.8% down, and to the upside about 0.7. So that's really your range. You have a 1.5% range that you need to stay within if you want to make money in this trade overnight. And all those other Greeks aren't really so important. So that's really the first analysis here. Now, if SPX gaps down or changes down, you can see the risk involved here. If you look at the top left over here, as I move the mouse, you can see tens of thousands for risk. If you stay within this zone, then what I call the bar is you can make 13,500. And then if you go this way, you're also risking a lot. So let's take a look at the next trade. So the next trade we're looking at is a regular standard Iron Condor. And this one, we can see that we have a break-even point about 1.3% to the downside, and to the upside 1.1%. So this particular trade structure covers a wider range of price changes. The Greeks, we have negative 43, negative 4 on the gamma, 1.8 on theta, and negative 334 on the Vega. Now overnight, this one could make 1400, but if we move too far, you're looking at a loss of over 18,000. And in case you're wondering what the structure is, I sold and bought deltas around the 7 for both the puts and the calls. So let's move on to the next trade. So here's an interesting broken wing butterfly type of trade. And if you're new to options, then maybe you haven't seen this structure. So what's cool about it is that to the downside, you have protection for about 0.5%, not much. But to the upside, you really have unlimited movement of SPX where you're going to make some money. So if it moves farther than 0.6%, then you're looking at a return of about 1,700. But if you stay within this range, then you're looking at possibly up to 26,000, which would be unlikely, but it does go way up to 26,000, and then anywhere between, pretty decent return. So this type of structure gives you a much wider range than those previous trades that we looked at. So the deltas on this one are around 18, 52, and 73, and I built this trade with puts. So the next trade that we're going to look at is a calendar spread. Again, another one-day trade. Your delta is 11.67, gamma negative 0.278, theta 4.3 thousand, and that vega of 2.3 thousand. So again, what's really important though is your risk and reward based on the risk profile where your break-evens are. This one covers a downward move to about 0.8% and upward about 0.9. So that's the range of this calendar, sort of in between these other ones. And so that's about all we're going to look at now, and then I will advance the calendar one day and see how all these trades performed, and we'll compare. So starting at the beginning, we're back to that short strangle, and this Tuesday the SPX surprisingly moved down 1.37%, and you can see that the strangle finished over here. So again, we didn't have much range. This trade lost overnight 28,330. So you can see how the theta position really doesn't matter. Your vega doesn't really matter. The only thing that really mattered in this trade was where the price went. Let's take a look at the next trade. So here's that Iron Condor. Now this one, interesting enough, it finished just barely where it's making the maximum loss, just right there. You never know with these type of trades, and sometimes you're gonna win and make a lot, and then other times you're just gonna lose the whole investment. So that's one thing you have to consider, because when you trade them, you have to realize that you're going to lose 100% many times, and so you have to account for that and do all the math. So this one lost 18,600, and you could see it was just barely lost. Like, it was so close to finishing up here, but close only counts in horseshoes. So let's take a look at the next one. So here's that broken wing butterfly. Now in this case, SPX moved down, so it went the wrong way. And this one, again, lost the full investment of $18,300. So this was one of those situations where SPX didn't stay neutral and didn't move up. So even though this one had a higher range, well, it still lost the full amount. And then let's move on to the next. So here we are with the calendar spread, and this one actually didn't lose so much, but it still lost. But you can see that this one finished right around here, just right around the break even. So this was a study of 4 different strategies, just one-day trades, and 3 of them lost an awful lot, and 1 of them was about break even. So it's just something to consider, because if you're going to do these all the time, well, if you hit a string of bad ones, you can see that your money can disappear rather quickly. So you gotta trade really small if you do these. But we'll do some more, you know, and sooner or later we're gonna hit some home runs, and then we can see how quick those profits will come in. So that's about it for this video.